Welcome to the weekly wrap-up for 29 June through 03 July 2026. We are looking at a green week worldwide. It started with a surprisingly weak U.S. jobs report, coming in with just 57,000 new jobs. That was far below the 115,000 expected. This development cooled rate hike fears and pushed Wall Street to fresh record highs. Over the course of this explainer, we will calmly walk through exactly how these global shifts impacted everything from your loan rates to corporate moves.
Let us start by looking at the board. In India, the Sensex closed at 77,764, which is a steady gain of plus 0.9%. The Nifty 50 mirrored that move, closing at 24,271, also up 0.9%. Moving over to the US, the S&P 500 closed up 1.8%. The Nasdaq was up 2.1%, and the Dow Jones added 2.0%. Please note that the U.S. markets were closed on Friday, July 3rd for Independence Day, so those U.S. figures represent the Thursday, July 2nd close. As we can see, it was a solidly positive week across these major indices.
Section 1. The Domino Effect.
This sequence brilliantly illustrates the interconnected nature of global markets. We can trace this out in 4 distinct steps. Step 1. Middle East tensions ease, allowing oil shipping through the Strait of Hormuz to recover. Step 2. As a direct result of that restored supply flow, Brent crude oil falls for a 4th straight week, settling at about $72 a barrel. Step 3. Because India imports a massive amount of its oil, this cheaper crude directly eases the country's inflation and import bill worries. Finally, Step 4. With those inflation fears subsiding, domestic buying steps in and lifts the Sensex and Nifty about plus 0.9%. It is a clear, logical progression from global geopolitics directly to local market gains.
Section 2. Rates and your EMIs.
Let us look at the realities in both nations right now. In the U.S., the Federal Reserve held its key rate steady at 3.50% to 3.75% on the 17th of June. Over in India, the RBI held the repo rate at 5.25% on the 5th of June with a neutral stance. For anyone new to this terminology, the repo rate is simply the rate at which the RBI lends money to commercial banks in India. When this rate is on hold, it dictates the cost of borrowing across the entire economy.
The verdict is that both central banks are currently on hold. This means that home loan EMIs, which are your fixed monthly loan installments, stay completely steady. There is no relief coming in the form of rate cuts just yet, but importantly, there is no hike either. The cost of your monthly borrowing remains exactly where it is for the time being.
Section 3. Business and Tech.
The sheer scale of these corporate moves is significant. First, HDFC Bank raised $750 million via 5-year dollar bonds. They secured this at about 0.90% over U.S. Treasury rates. You might sometimes hear that referred to in financial jargon as 90 basis points, but in plain English, it simply means an additional 0.90% above the baseline rate. Second, Bharti Airtel announced plans to pump a massive 20,000 crore rupees into Airtel Money. Finally, in the tech space, Microsoft launched a $2.5 billion operation called the Frontier Company. This initiative will embed 6,000 engineers directly inside customer organizations to help them deploy AI systems at scale.
Section 4. Commodities and what's next.
We will methodically read through the asset performance for the week. Crude oil ended at about $72, recording a loss of 2.1%, which marks its 4th straight weekly decline. The Indian rupee slipped against the dollar, closing at 95.34, representing a decline of 1.2%. Gold saw a positive week, rising 2.0% to approximately $4,170. Bitcoin also had a strong showing, adding 3.9% to reach about $61,800.
Looking ahead, there are 2 key timeline points to watch next week. On the 8th of July 2026, the U.S. Fed will release the minutes of its June meeting, which will provide vital clues on their future rate moves. Then, on the 9th of July 2026, Tata Consultancy Services reports its Q1 FY27 results. This is a highly anticipated event as it officially opens India's earnings season and sets the tone for the broader tech sector.
To conclude our analysis, watch for the rupee near 95.3 and any potential rebound in oil prices. The bottom line is that soft U.S. jobs data cooled rate hike fears and lifted markets worldwide. In tandem, falling oil eased inflation worries here in India. That wraps up this explainer. Be sure to follow at @CA_Tharoon_Daleep on Instagram.